Welcome to my channel Sing the Real King. Disclaimer: I am not a SEBI registered analyst. This video is intended for purely education purpose. Any kind of entry exit, do with your own due diligence.
Let's have a market view for next week. As on 19th Monday, Nifty has been opened at 18,288 and made high of 18,431. Past three trading session seen highly panic sell-off. Nifty closed on Friday at 17,807, that is minus 3.5 percentage from weekly high, and most importantly broke all recent support levels. But if we analyze FII DII trading data, we come to know that most of the time FII and DII in positive side only. 19th Monday FII sold 538 crores, but DII bought 687 crores, that is positive trading of 149 crores on Monday. 20th Tuesday FII bought 456 crores and DII also bought 495 crores, total 951 crores. On the day of on the day Wednesday, the sell-off started. 21st Wednesday, FII sold 1119 crores, but SII bought 1757 crores, that is net buying of 638 crores. 22nd Thursday, FII bought 929 crores and DII also bought 2206 crores, total buying of 3135 crores. Friday we can see FII sold 707 crores, 707 crores. FII sold, but DII bought very heavily 3,399 crores, that is net buying of 2,692 crores. As per the above FII and DII data clearly shows FII and DII are very much positive in Indian market. What happened last week was panic selling off by retailer investors. One small but important information we have received from health and medical experts in India. First, in India, more than 90% people were infected by COVID-19 or its different variants. First, different variants has been infected more than 90% Indian populations. And second, India has completed successfully vaccination campaign, and most of the Indians are vaccinated. So Indians have dual advantage, means our body itself developed an endogenous immune system for fight against this coronavirus, and we have vaccinated as well, so that gives hybrid immunity to Indians. Conclusions, that means the conclusion comes, Indians are very less likely to affect a new variant of COVID-19. So this will be how it related to our Indian market. Once the clarity comes to Indian common people, the fear will come down, and the positive sentiments will help the market to rally again. So my view in Nifty may take the advantage in coming next week. Once this selling off settle down, Nifty higher chances to go higher side only. Last week, global indices were closed with a mixed closing. US and some European indices were closed slightly positive, but most Asian indices were closed in the negative closing. Nasdaq, Dow Jones Future and S&P 500, and moreover SGS Nifty closed slightly positive. Not only India, VIX rocketed from 14 points to 16.16 points, shows volatility has been increased in Indian indices significantly. Indian market may open flat to minor positive. Most probably we can see reversal in the Nifty this week itself, and mostly in Nifty may stay in the range between 17,800 to 18,400 range. In the downside, we can expect 17,400 as a support level, major support level, and 18,100 may access initial resistance, and 18,600 will be strong resistance level. Let's have a review for last week's in call picks. First stock we have recommended is Raymond's. The CMP 1585, made a high of 1624, but the stock has hit the stop loss. Second stock VBL, recommended price 1397, made a high of 1421, gap up, open is equal to high. This VBL also hit stop loss. Third stock in our list, Vadilal, recommended 2661, made a high of 2790, achieved our second target. Fourth stock BSHSL, recommended at 195, made a high of 225, achieved our third target. Fifth stock in our list was VSSL, recommended at 315, made a high of 332, achieved our first target. Next stock was Aegis Chemical or Aegis Logistics, recommended price was 358. This stock also hit stop loss. Seventh stock Kalyan Jewellers, recommended at 125, made a high of 131.80, achieved our first target. Max India was our next stock, recommended at 105. The stock has opened at gap up open, opened at our first target. Moreover, it is open is equal to high. We didn't receive this entry. Next stock in our list, Madras Fertilizer, recommended at 88, achieved made high of 96.5, achieved our first target 96. Next stock Rajashree Sugar, the recommended price was 55.50. The stock has made 69.90, but the stock was very huge gap up, opened at 62.40. It is above our first target, so we didn't receive the entry. We didn't receive the entry, so we skipped the entry in at Rajashree. Now the stock is corrected, now at the entry price only. Let's do analysis for this fixing call picks. First stock in our list, MBAPL, CMP 527. MBAPL, the stock is very much bullish from past 1 year. The stock rallied from 90 to 550 levels, that is almost more than 600% return in a single year. The stock touched ATH level last week, and a small profit booking came in the stock due to panic selling all over the market. My view, very good stock. It will be continue its rally, the bullishness in coming week also. The stock, don't buy it immediately. We can consider the buy on reversal. Target we can keep for MBAPL 540, 550, 560, 572. Stop loss 505. Very small stop loss. Reward will be higher chances to get very good reward if the stock is getting reversal. Second stock in our list, Solar Industries, CMP 4036. Solar Industries recommended past several times and got very good return in the stock. After made ATH level for past few weeks, the stock is in the range bound, but at the lower levels the stock is showing very good strength, which gives a higher probability to move or higher side. The stock is in the range bound for past few weeks. Higher chances to break out this level. The target we can keep for Solar Industries 4100, 4160, 4200, 4270. Stop loss on closing basis 3940, 3940. APAR Industries CMP 1654, 1654. APAR Industries showing highly bullishness past few months. In our past recommendation, we got very good return in the stock. The stock making higher highs, that shows the APAR Industries has a still higher momentum, higher bullishness in the stock. Still chances to move upside. We can keep encash this momentum, so we can keep the target 1675, 1720, 1745, 1800. Stop loss 1530, 1530. Next stock in our list, M&M CMP 1225, 1225. Stock trading in a range past 20-22 weeks, but the stock still holding the weekly consolidation support level. Why I have selected this stock is SL is very minimal, as low as 35 rupees, and if the stock retouches weekly consolidation high levels, we can able to get very good reward in this stock. The risk reward ratio is very much favorable. That's why I can considering this stock. Mahindra and Mahindra, we can keep the target 1250, 1290, 1325, 1350. Stop loss on closing basis 1190, 1190. So stop loss is very minimal, as low as 35 rupees. Fifth and final stock in our list, Cipla Limited, CMP 1119. Cipla, after a range breakout, the stock retested the similar level and now showing reversal sign from that level. Moreover, the COVID news bringing positive sentiments to pharma sector. So most of the pharma stocks are showing bullishness. Safe players can consider pharma Bs as well instead of buying single stock. Cipla, we can keep the target 1140, 1170, 1185, 1200. Stop loss on closing basis 1080. Very small stop loss.